In this video, let us start with the second method of issue of shares, that is for consideration receivable in installment, termed as COTS. So here the detailed version has been given in your textbook. You can just go through all those notes. So let me just tell you all the important points and let me discuss the journal entries related to this method. So under this method, the majority of issue of shares by public limited companies are made in this way. So this method is more flexible and convenient. The prospective investors need not pay the full value of the shares immediately. So what do? Is they can apply for more shares than they can immediately pay for. So how does it work? So first one, if you see, there are important steps in this procedure of shares. So first one is issue of prospectus. So this you very well know. So a prospectus is issued by the company inviting the public to subscribe for its shares. And here there are certain rules, that is as per section 69 subsection 3. The applicant has to pay at least 5% of the nominal value of shares as application money. So however, as per the recent SEBI guidelines, the application money demanded should not be less than 25% of the issue price of the shares in case of public issue. The second one is receipt of application. So here is as soon as the prospectus is being issued, then the subscribers or the public are allowed to buy the application forms, and there are certain conditions under this. You can go through your textbook. The next one is allotment of shares. So this is where it is very important. You have to note down certain points. That is, what is allotment of shares? So here, on the expiry of the last date of receiving the application, a detailed list of the applicants is prepared showing the number of applicants in different categories based on the number of shares applied by them. So here the directors can proceed with the allotment based on certain rules to be followed. So here allotment of shares, there are two different terms, important terms which you have to know. One is under subscription, another one is over subscription. So these are the two main terms which you have to know. So what is under subscription basically? If the total number of shares for which the applications are received is less than the number of shares issued, in this situation it is called as under subscription. For example, a company is issuing 10,000 shares to the public, but the public brought only 8,000 shares. So the remaining 2,000 shares is a loss for them. So that is, there is no public wants to buy it. So this is under subscription. So if the actual application received are more than the minimum subscription, allotment can be made for all the applicants. The next one is over subscription. So this is again a very important term. So when a company receives application for the large number of shares, then those offered to the public, this situation is called oversubscription. With the same example, the company issues 10,000 shares, but the subscription was more than that. Say for example, 12,000 subscription was there. So then that means it is oversubscription. So under that, we have three different methods. One is full allotment, second one is selective partial allotment, and the third one is pro rata allotment. So full allotment, so you know already, the board of directors may make full allotment to the required number of applicants and reject the other applications. The next one, selective partial allotment. So how does it work? For example, those who have applied for 200 shares or less may get 50% of the shares they applied for, and those who have applied for more than 200 shares may get 25% of shares they have applied for. So here the shares may be partially allotted to different categories of applicants in different ratio. And the third one, if you see, pro rata allotment. So here it is a very, very important term, pro rata allotment. So here the shares may be allotted proportionately to the applicants received to all the applicants. So here it may be possible to reject some applications on basis of some criterion, and for the balance application proportionate allotment may be made as a previous method. See, for example, I'll just tell you with an explain this with an example. See, if 50,000 shares are offered to the public, for which 2 lakh applications are received. So, 1 share for every 4 shares applied for may be allotted to all the applicants. So, alternatively, the applications for 1 lakh shares may be fully rejected, and for the remaining applicants, the pro rata allotment may be made in the ratio of 1 share for every 2 shares applied. So, this is how this works, pro rata allotment. So, first step is application, the second step is allotment, and the third step is the calls of shares. So, what is calls basically is out of the issue value of shares, some amount is received as application money and some more on allotment. So, the balance amount may be collected by the company in one or more calls. So, that you call it as first call, second call or final call. Now, let us move on to the accounting treatment. Okay. So, the first journal entry, that is for receiving the application money. So, that will be bank account entire to share application account. So, this is again a revision which we are doing. Okay. The detailed version will be available in your textbook. The second entry, if you see, that is on allotment. So, allotment entry is where first entry for transfer of application money. So, that is at the time of share allotment, this share application account data to share capital account. So, here what this entry is for the being transfer of application money to the allotted shares. The next entry is for return of rejection application money. Okay. So, it can be rejection or a refund. So, you need to pay back the money to the subscribers or the applicants. So, that is share application account data to bank. So, here being return of application money of rejected applications. The third entry is for amount due on allotment. So, amount due on allotment is for allotment the money has to be paid. So, that is share allotment account data to share capital account. So, that is being allotment money receivable. And the next one for the adjustment of excess application money. So, share application account data to share allotment. So, here when the pro rata allotment is being made, this entry is being made for adjustment of excess. And for the receipt of allotment money is bank account data to share allotment. Okay. So, this is being the amount received towards the allotment. Okay. Now, this entry can be a combined entry where you can also show this entry as share application account data to share capital. This entry, first entry, then the second entry, that is share application to bank, and the fourth entry. So, first, second and fourth entry can be a combined entry. So, the entry will be like follow: share application account data to share capital to share allotment to bank. So, this can be shown as this. And the next one, so after the application, after the allotment procedures, now we have to move on to the calls. So, calls, when the share first call is made, that is for call amount due, that will be share call account data to share application. So, this will be being share first call amount receivable. And the second entry is for receipt of call amount, that is when the cash is received for the first call. So, that will be bank account data to share call. So this is again being the amount received for the first call. Similarly, the same entry repeats for second or third call or the final call. So these are the journal entries, basic journal entries for the issue of shares.